So you want to know, should you sell or buy a home right now? And overall, is that a good decision based off what's going to happen in the future when you look at the housing market? We'll stick around because on this month's edition of Yes, already March, National Housing Market Update, we are going to keep you current with what matters most. And as you know, for most people, that's what's happening with prices, rates, and overall, what is everybody else doing? So stick around and we'll cover that on this month's edition of Keeping Current Matters. Well, thanks for sticking around. And that's right, there is a lot happening. And as we look at is now a good or bad time to sell a home, well, there's a lot of context that goes into that based off where are you at and your needs, but also what's happening in the market. And we're going to cover that right now. Before we do, let's look at, though, our goal through these videos is to define reality. As you look at this quote, the first responsibility of a leader is to define reality. And as a real estate consultant, coach, leader, and representative for so many people in the selling process, it's very, very important that we look at articulating and defining the reality of the current housing market. And this slide does it very well. As you can see, the mortgage rates on the left-hand side of this column continue to create a certain level of strength or weakness when you look at overall demand relative to the market itself, meaning that the overall inventory levels is what really creates demand based off the limited supply. And we're going to talk about that today. However, as you can see here, demand is decreased or weakened as we start getting over about 6.5% interest rates. Every time we see those dips come back down. Now, what was interesting is you look at kind of in February here a couple weeks ago, that last little dip back down that started showing demand. And then, yes, it started to weaken was as we start to see different reports around maybe we're not slowing down inflation as much over the last several weeks. That's where you're starting to see the interest rates rise. However, what you're definitely going to experience is every time those rates drop to a certain threshold, a lot of people come flooding back in the market, which is what we saw towards the end of February with that little dip as interest rates started to come back down closer to 6.5%. Now, as you also look at, though, the comparison to why is this happening or how can we predict it is the 10-year treasury yield is a great prediction to where our mortgage interest rates going to go. When the Fed does specific things with the reserve rate, that is a lot different than the overall mortgage interest rate. The one to compare to where there's actually a lot of similarity is the 10-year treasury. And as you can see, really over since the beginning of February, we have seen nothing but that rate continue to go upward. And as you look at the reasons for that, we already shared is while we're working on other factors within the economy. And what are some of those is, as you can see here, the chief economist from Freddie Mac said the economy is showing signs of resilience, mainly due to consumer spending. That's us, our spending, and rates are increasing. Overall housing costs are also increasing and therefore impacting inflation, which continues to persist. So as we start to see mortgage rates and can predict that they may stay around this rate, is we start to get these new thresholds for affordability, meaning that once people start waiting, they eventually get sick of waiting. And when there are good impacts to the leading indicators for us, which is mortgage rates at the moment, when those start to dip just a little bit, you get a lot of people flooding back to the market. As you can see, the average spread was about 1.72 on the 10-year treasury if you go back, the last 30, 40 years. So if we just said 1.72 to whatever the 10-year treasury, you had a great prediction of what the actual interest rate is. You can see here that spread right now in March is actually 3. So the 10-year treasury compared to 30-year fixed rate. So how do you explain that? Is while there is uncertainty or fear in the economy, that spread is greater. And so as we continue to figure out what to do with inflation, how to slow down some spending, is that fear is going to continue to remain for many people. And that is another indicator for why we may continue to see interest rates stay where they are. So as you start looking at, well, what does that lead to, is an even bigger challenge than that of just the interest rate. And that's right, it's inventory. Remember, the actual inventory is what dictates the type of real estate market. Are you in a seller's market, a balanced market, or a buyer's market? And remember, a balanced market is anywhere between 4 to 6 months of inventory. Anything 4 months or less is a seller's market, and across the nation, we have a bigger challenge with inventory, which actually is still putting us in a seller's market, which means home prices are appreciating. Not a dramatic rate, but they're continuing to increase. As you can see here, the U.S. total listing count, you can see from the slide, all the way going back to January of 2017, we have less inventory all year over the last 12 months than we have at any time in 19, 18, or 17. You can see that March of January 2020 with the pandemic. From that moment on, all we continue to see was a decrease in inventory. The challenge with the rates is that we will definitely get through this rate change, meaning they'll eventually lower. However, when they start to lower, we may see a flood of demand back in the market. And the challenge is right now, we continue to see total listing count decrease. You can see here, while the number of homes for sale is increasing, it is still 47.4% lower than it was before the pandemic in 2017 and 19. What that really is talking about is the demand, yes, is higher, but we have, look at 2023, the active monthly listing count over the last 7 Februaries is only at 577,000, which is almost half of where we were in 17, 18, and 19 combined. So what is the big challenge with this is also many people do not know, but we're experiencing inventory decrease every single month. So this is month over month from February. You can see across the entire nation, there's not a single state that is seeing a supply build up, which just leads to the question of, is the housing market in trouble? Is it going to crash? Is that with lack of inventory, the demand that is available, ready, and out there, there is very little, zero to no likelihood that there will be any crash. What we've experienced is a correction through a dramatic increase in mortgage rates, and that's still leading to a good amount of demand, but that is truly because there is absence of inventory all across the nation, as you can see in this sign here. As you look at some states month over month, like Nevada, a 10% drop. Washington, 12, Colorado, 7. So a big drop in inventory. And as you can see here, for 14 straight years, we have seen single family housing units completed be less than what we actually need for the average annual units to be completed. We don't need additional units to be completed like you saw through 2000 and 2008. However, which there was 4 consecutive years of record-setting units, which led to a little bit of that crash or an overage of supply. But as you can see here, we have 14 straight years of below the 52-year average buildup that has to somehow have certain homes completed to raise the inventory to slow down home price appreciation as well as demand. Population, transportation, as more and more people come to this amazing country and there's a lack of homes, the one thing I would always recommend and suggest betting on is supply and demand. Now, as you can see here, the housing market short millions of homes is that, yeah, these national values from many of these market economist report centers is there's just millions of homes that we are short. And whether you take Realtor.com all the way down to Moody's Analytics, is that the number of homes short is several millions if you took the average of all 6. Now, what really happened with the correction, though? We were just talking a moment ago around no crash, most likely home price appreciation. They're going to continue to rise because of the constraint market with inventory. But you can see how much have prices fallen from the peak. So this peak run, which I'm going to close out here in these last 2 minutes with some amazing data that supports, again, real estate's long-term wealth accumulation, is that anywhere between about 1 to 3, so let's just call it 1.5%, is the actual drop in home values since the peak of June. And then really this drop throughout the year, which we know most states are experiencing month over month appreciation, back to that slide you saw in the decrease of month over month inventory. So Well, pause for a moment. It's not a game show. Our goal is to continue to bring you facts so you can pause and hit the green or red button for yourself. For most people, it's a because on why they make a real estate change, because of living situations, job changes, recreational goals, and dreams. Anybody trying to time the market is usually an investor, and very few investors actually spend a long time period in the market. For most people making a primary change, wanting to get closer to family, downsize, it's about maximizing the opportunity and just confirming you're making a good decision. So just so you know, if you're thinking of selling a home, press in that green button. Yes, it is a good decision as long as it's right for you. Waiting, no, can be a great decision as well. If you don't know, it's time for you to make a change. If you're feeling rushed, hit the red. If you've wanted to do things for a long period of time and you're sick of waiting and you're just trying to answer the question of is now a good time, hit the green. Because yes, it is. Let's look at why. Well, because no matter how you look at it, rent is always going to cost you. It's always gone up since 1988, and that will continue. May it stay flat for certain periods and then go back up again like it did in 2008, of course. But the one rule of thumb with waiting is that you can always count on rents rates to increase. As we look at the estimated national price performance, home values will always continue to appreciate. Now, yes, as we look at 2023, is there a potential that we will see a -1 or -2% in the nation? But many local markets will see appreciation because they outperform the national average. But look at this, is yes, maybe a year lost of 1.2, but over the last 22 to 23 years, look how much accumulation as a national average, homes have almost tripled, meaning 300% growth. As you look at the wealth accumulation on an average $400,000 home over the next several years, 5 to 6 years, is about $54,000 of equity gained, or let's call that increase to net worth. And then as we start looking at some of these other key areas that people make their decisions off of is the benefits to long-term real estate investment, which is 48% of mortgaged residential properties in the United States were considered equity rich in the fourth quarter. That means that the combined estimated amount of loan balances secured by those properties was no more than 50% of their estimated market values. We would have to see a drop in the average home price of over 50% to no longer still consider ourselves doing well with equity. But right now we are actually equity rich, meaning an abundance of it. You can see the Home Equity Insights report from the third quarter of 2022, year over year, $34,000 average equity gain. As we look at a 16% year over year percentage increase in equity for U.S. homeowners because of where homeownership prices continue to go. And for many people who follow investors, is that many people are calling America the renter's nation. And every time we wait to take advantage of more wealth accumulation for real estate, it usually harms or hurts unless it was for the right reason. And here's why. As you can see, the 5-year percent change in home prices, national average was 58%. So for those that over the last several years were still waiting, lost out on a massive amount of wealth accumulation, real estate investment, and equity that they can do many things. For those that purchased homes during the pandemic, instead of waiting, taking action. For those that maybe are not satisfied with their current home, you may be surprised that you have a lot more equity in it and you can actually turn it over quickly to the exact home you do want. There are different challenges that are presented with doing things like that. However, you at least have the option. All of this comes from your desire to, again, be in real estate long term. And as we close, the reminder of since quarter one of 1991 to quarter four of 2022, almost a 300% overall national gain. You look at some places like Colorado only being beat by one other state, Utah, at 574%. So overall, to answer the question, is now a good time to buy or sell? You have to take the context of why you're doing it, what type of market you're doing it in. So if why you're doing it has a high motive to act, you're selling in a seller's market. If you can take advantage of opportunities while demand is a little slower, you're buying in a seller's market, where most likely though, you can actually take advantage if you work with the right professionals of the mistakes and opportunities that exist, because for some people, they're not advised. And for a lot of real estate agents, they have not been in markets like this. So from me to you, as always, there's a couple things to remember. Don't follow the headlines, as most of the time they're just sent to really hurt any true knowledge to what is happening, because the context, again, as you look at slides like this, is that very few people have any regret based off the wealth accumulation and what they've seen in the housing market over the last couple of years. But many times there's when rushed things we would do differently or things we might change. And that's exactly what you're experiencing with some that are sharing their feedback of what happened when they were rushed. That's what makes right now a very unique time. You don't have to rush, but prepare well. So then that way you can take advantage of the unique market we were in. Because if I was going to explain the market, I would use one word, and that's called interesting, because you're still able to take advantage of a lot of the psychology and mistakes of people that are not professional in the industry, as well as the other people that are out there making decisions purely on a market versus many things that are lives, which dictate overall happiness and desire, and then taking advantage of the market they're in. And if they are in a bad market, waiting it out. We are in the farthest thing from a bad market, so waiting it out for that reason doesn't make sense. Waiting it out to gain more intelligence and a higher level or motive to act is important. But don't wait thinking for something that's not going to happen, or not spending time learning, which I know that's not you, because if you watch our videos, it tells me two things. One, you value your time and giving that to learning about information and education. I hope to continue to always provide you accurate and updated, not the good news or the bad news, but the news and what's happening in housing. And that overall, you're looking for somebody to continue to teach you. And as you're ready to transact, remember, it's not about finding the best salesperson, but when you're looking at getting help with money, insurance, real estate investments, as you go to the heart of a teacher. And then at that point, you want somebody who can ask very high valued questions and get you intelligence so you can take advantage of all the conditions that support this market. Or if you're waiting, spend time continuing to learn. So from me to you, I hope your families are doing well, and we will talk to you next month on Keeping Current Matters and the National Housing Market Update. But always remember, if you're curious, you want to know more, schedule a 15-minute consult with me and we can do a strategy review. And if you're looking for help outside of Colorado, all across the nation, let me know and I'll point you in the direction of the top 1% of agents who can help you answer any questions you have about real estate and your specific situation. Justin Martin, until next month, talk to you soon.